I remain, I would say, committed to investing in China. I think China is, let's look at the basics. When you look at the Chinese economy, it's the second largest economy in the world. You have a population of 1.4 billion people. You have a significant middle income population that's growing. You have a growth in GDP consistently. So I think these are all, let's say, the basic frameworks of how we look at China. And I think if you look at the 2024 markets in China, if you look at Shanghai and Hong Kong, both had double-digit returns as markets for 2024. I think the Chinese government, particularly in the fourth quarter of 2024, came in and gave a positive boost to the markets. I think on the consumer side, China has a lot to offer, and I think will continue to provide good opportunities on the consumer side in China, which we find very interesting. No doubt, I think a lot of the challenges you've outlined, tariffs, trade, wars, for whatever word you want to use. I think these are all challenging. I think not just for China, I think for the world. But I feel at the end of the day, there's enough out there for pragmatic, reasonable, soft landings that would generate, I think, an optimal outcome for all. Hopefully that's kind of the direction this ends up going. But ultimately, I think it doesn't change my view. I think China remains an interesting place to invest, and I think there are opportunities for sure that we continue to see.
Do you think policymakers need to do more to firm up the domestic economy, though?
Yes. I think the domestic economy is obviously crucial, particularly given the way the trade or the global trade situation has evolved, and anything to help continue to boost the Chinese consumer market, I think is a positive signal to the markets.